My name is Richard. I'm a psychotherapist and coach, and you can find me at deepimprov.net. And today I am with Tom from Trading Apologist, who has Patreon, YouTube, X account, all under Trading Apologist, where you lead people in all things trading and investing, basically. Is that a good description?
Yeah, equities,
Yeah.
commodities, and crypto, and basically trying to smooth out the painful process that can be learning how to trade and invest without losing money, which took
Yes.
me some years. And so the hope with starting this was to kind of streamline some of those things that I struggled with early on. And I think that everybody struggles with early on in trading and investing.
You and I are going to have a cross fertilization conversation between your trading experience and my psychological perspectives.
Hmm.
And hopefully it'll be interesting for people. So, yeah.
Yeah, I think it absolutely will be.
What I'd like to do is start with just some of my main ideas, like to share my overall mental framework. And
Hmm.
then from there, let's try to make it more practical. So I don't want to spend too much time in the abstract realm, but I do feel like I need to lay out a few principles first so people know where I'm coming from because they're pretty counterintuitive. The first kind of headline idea is you are your own alpha. And the idea there is that in investing, there's fundamental analysis, there's technical analysis, but so often there's not enough inner analysis.
Hmm.
And I think that when people are unconscious of their emotional lives, their inner lives, that's when things actually become really problematic. And so that leads to my second headline, which is so normally people say, when you trade, you want to take the emotion out of it, right? It's something like that.
Yeah.
My stance is trade with your emotion. And so the idea there is you can't really get rid of your emotions. They're there whether you like it or not. We're all human, which is a good thing. It's good that we have emotions. And I think the problem is if we try to get rid of our emotions, what we're really doing is just fighting against ourselves. We're setting up a divide within ourselves. And if we drive emotions down, try to repress them into our unconscious life, we're still going to have those emotions and they're still going to be operating on some level. And so the idea of trading with one's emotions is the idea of, well, if we befriend our emotions, if we build a relationship with them, going back to this notion of analysis, if we chart our inner lives as much as we chart the markets, that I think we have a much higher chance of success by not unconsciously, reactively making decisions, basically. What I think is important here, let's go to this notion of alpha, is like people say, well, what's your edge in the market? As retail traders, we have limited information into the workings of the markets, right? Like we do our best, but to me, it seems like you have an edge over 99% of retail traders if you are conscious of your emotional life and really understanding what's happening internally. For example, people will say, you should take the fear out of investing, right? Because that's a problem. You panic sell, you buy at euphoria, whatever. But the thing with that is I don't actually think it's a good idea to take the fear out of investing. I think what we want is a wise discernment about when and how to use our fear. So I could imagine an example where fear is a smart indicator. You're about to YOLO your life savings into one highly volatile asset. Your fear might be telling you something about the quality of that decision, you know?
Hmm.
So that's a different kind of fear from buying Tesla at 4-year support level or something,
Hmm.
right? So the point is like, I think that there's a lot of alpha or edge that somebody can get by, instead of avoiding their emotions, learning and calibrating their emotions to bring it along with them. So they start to understand, what are these signals? How do I learn to work with these signals within myself? So that's my little spiel in the beginning. There's a couple other bullet points, but any questions so far?
No, I just one response to that, and I think it's a great way of framing things up because it's often been said that investing is the hardest job in the world,
Hmm.
and I don't think it's literally the hardest job. There are people who have much harder lives
Mm.
and have physically much more demanding jobs, but I think that saying sticks around because of how emotionally challenging investing can be. And I often
Yes.
talk about in my TA classes, the technical analysis side and charting might feel overwhelming at first, but with a little bit of practice, you can master that. And really understanding the emotional side and getting control of that, I would say takes the longest in
Hmm.
investing. And,
Hmm. Hmm.
everybody has a different temperament and personality and aversion or proclivity to pursue risk.
Hmm.
And I think all of those things come together. And that's why I was excited to have this conversation, looking at my Patreon group and other investors out there, just trying to sharpen up a framework of how to recognize the emotions. And like you said, they're not necessarily bad things. Sometimes they're telling you something, they're warning you of something.
Hmm.
But how do we bring all this together with our macro, our fundamental analysis, our technical analysis to make wise decisions?
Yes. Yes. Yeah, exactly. And, if I were to think of a thought experiment, like let's imagine we have two people and maybe it's a poly market bet. And
Mhm,
person A is really good at TA and very unconscious emotionally.
mhm,
And person B, not so good at TA, but maybe decent at picking assets and very conscious emotionally. And what
mhm,
person would you want to place your bet long term for who's going to do well financially? Right.
mhm.
And I think that that's a good thought experiment because for me, it's like if you're just reactive emotionally, it doesn't matter how much technical you've got in your mind, you're going to make bad decisions.
And it brings out the most challenging emotions. I mean, the obvious ones are fear and greed, but then
Hmm.
if market conditions change and you're not doing well, uncertainty and doubt and all kinds of other feelings creep in that if you aren't analyzing those can just be a form of paralysis,
Yes.
um, that can on the flip side also then have you miss an opportunity if you've given into those and not I guess processed through them appropriately.
Yes, yes, exactly. Exactly. Yes. Yes. And so that leads to another one of my big picture mental framework ideas, which is that these aren't just assets, they are things we have relationships with. And that relationship is an emotional, symbolic relationship. It's not just numbers on a screen. If we embrace that, I think that unlocks our ability to become more aware of how we're relating to things. Two more orienting
Hmm.
ideas. As you alluded to, I think it's really important to know the kind of person you are. And I think we'll
Hmm.
get to that a little bit in some of the Patreon comments and questions. One thing that I see that people are really struggling with is they're trying to be a different kind of trader than their temperament and personality is innately,
That's interesting.
right? So they see, I don't know what to call it, profit porn, maybe the screenshots of the huge profits of whatever perp trade or whatever, and
Hmm.
so people think, wow, that's I want to do that. I want to be the one that posts the big crazy thing or whatever.
Hmm.
They might not be taking into account, am I the kind of person that likes the stress of perp trading? So I think that that's another really important thing is like the match between the personality and the trading or investing style. And I think that
Yeah,
trips up a
that's a very
lot of
good point.
people. So we can get more into that when it comes to the comments. So,
Yeah, that's
um,
a great point, and I hadn't really thought about it from the personality angle, but
mhm,
in a lot of my classes I talk about, there's so many different styles of TA, there's so many different styles of investing just like you were talking about with perp trading,
mhm,
there's swing trading, you can play
mhm,
with options, just longer term buy and hold,
mhm.
income generation strategies. Finding what works for you, I think I've never approached it from that lens, but should also take into account your personality and what work, not just the lifestyle side. Because I always say
Mhm.
what works for your lifestyle, but
Mhm.
what works for your personality is equally important.
I mean, this is a point that James from Invest Answers would probably
Mm,
make as well is like, if you really want to be like a serious trader, I think you have to genuinely love it and be passionate about it.
mm,
And I think like a lot of things, there's like a Pareto distribution. There's a few people that are going to be really good, and then there's going to be a lot of people that aren't so great at it. And the people that are really good, they're passionate about it, they love it, that's maybe all they even think about, and they put a lot of time into it. And for the average retail trader, that's just not really feasible. They don't love it enough, they don't have enough time, their passions are elsewhere. And so there's really that calibration of like, not just what kind of person I am, but also like, what do I love? Like, what enlivens me? How do I want to be spending my time? And so this is really, again, like, you are your own alpha. Like, if you know yourself, then you know how you can fit into these different possibilities. So one last small point is, this is my own kind of pet idea. Not everybody maybe is going to take this stance, but I love personal growth. For me, whether you win or lose a trade, I think that the thing that we can gain out of this kind of work of trading, investing, is that we get to learn about ourselves along the way. Trading, investing, value, imagining and hoping for things in the future, all of that elicits like our deepest dreams and fears. And how do we feel when we're confronted with a market that sometimes blesses us with gifts and other times punishes us with intense malice? And at least that's how it feels, right? So all of these are opportunities of like, how do we navigate these core aspects of life? And so whether you win a trade or lose a trade, for me, if you get something in terms of personal growth out of it, you win every time.
Yeah, absolutely. I was actually thinking about that yesterday when I was ski touring. We were just like, when you're hiking up a mountain, you have a lot of time to think. And I was thinking about the trades that didn't go well recently. I'm just trying to connect a few thoughts to what you said earlier on. There are a lot of people on X that are, momentum or hype traders, which does well for a season in markets. And did really well last year. So I think a lot of people who are newer, they start following these folks and they're seeing their portfolio climb by these large numbers, and they just don't have the time in markets to realize that that kind of environment doesn't last in perpetuity. Markets go into phases of consolidation, they pull back. Momentum isn't always going to work, and you have to adapt your strategy. And for me, when I got to the point in my trading from following others to relying on my own decision and reasoning, it actually took the emotions down a lot, because I guess maybe for some people it could be more stressful, but instead of looking externally and saying, oh, why didn't you tell us to get out? I was like, okay, what could I have recognized? What could I have done differently? Taking responsibility for your actions in the market and learning from them has helped me a lot.
Yes. Yeah, and that we'll just jump around a little bit. There was a question somewhere about conviction. And so that would be one question for you, is like, how do you come to conviction in terms of trades? And one answer to that is experience, right? And so maybe one takeaway is like, if there's a lot of fear in the trading, maybe there's not enough experience yet. Maybe that fear is saying, I don't have enough experience to have conviction yet. Or I'm placing too big of a bet here, and that's why I'm afraid. So because there is something about, like, I think once you do have enough experience, it takes a lot of time, I think, to get there.
You can have all the experience in the world, but you're never going to have 100% hit rate. And I think that's important to recognize. It's all a game of probabilities, but once you have seen certain things in the charts work out, more than they fail, and you're bringing multiple signals together to stack the odds in your favor as best you can, and you're making the wisest decision possible, that helps eliminate the emotions of fear. And there are still going to be trades that turn against you and continue to drop, even though all the signals say this should be a turnaround point.
That kind of leads back into this fundamental idea of like working with emotions rather than against them, right? So I think it sounds like a lot of people get stuck if they, like, I think some of the Patreon questions were like, what do I do when I've lost multiple trades and I'm feeling pretty bad about that? And my answer to that would be, make room for the feelings. Let yourself be pissed off, grieve, cry, punch a pillow, whatever you need to do because otherwise that energy is just going to kind of stay stagnant in one's body and leave a kind of bad taste in general about what's going on. And the other thing, of course, is how do we process these things internally? I'm a bad person because I made a bad trade, right? Like whatever stories we're telling ourselves can be very, very powerful and painful. I'm such an idiot. How did I do this again? Or I don't know, the kind of like really kind of mean-spirited towards oneself things that we say to ourselves sometimes can also really weigh heavy. So there's a lot of psychological work there about how do I orient to a loss? How do I orient to mistakes?
It's almost a bit of negative reinforcement going on when you lose multiple times in a row.
Yep.
But looking at, and I'm sure there are more personality types, but just to put people in two camps, someone might have a more positive internal dialogue, and someone might have a more negative internal dialogue. How would you suggest those two kinds of, personalities deal with that reoccurring loss scenario?
This is where things can get quite complex, and it's easier to work with individuals and their complexity, right?
Sure.
So I'll just name that. But in general, my stance is always building more of a relationship with whatever those feelings and dialogues are. That's where you have to start. You have to get to know it. And then that's when you can start to kind of reality test it. Am I really an idiot because I made one bad trade or two bad trades or whatever? So that's where I would start. And of course, the really self-deprecating is dangerous, but so is the grandiose. That's dangerous in another way. I'm such a good trader. I'm amazing, whatever. Well, that's not going to be a good place to make decisions from either, right? That's a good way to lose all your money on one leveraged perp or something, right? So
and if you're beating yourself up about a trade, do you think there's any value in going back to say, okay, what happened? What decisions did I make, and would I do anything differently, or did I make the right decision with all the information I had?
Yes, I love that. So perfect. That's a super practical thing. That's a great suggestion for people is, would you have made the same decision again? I think that's important and pretty unorthodox, I think, in the finance world, but I want to validate being irrational sometimes. So if you've been struggling, I don't know, trying to trade Solana and just keep losing money over and over and over again, and you just feel like crap about it, your feelings matter too. That's my stance. Your own inner energy is part of the opportunity cost of a trade. So my view is like, if you are just so sick of watching MicroStrategy just go down, 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 and you just loathe Michael Saylor at this point, you don't have to stay in that trade. There's many assets to choose from. I think our relationships to assets matter, because if you're pissed off about holding it all the time, that doesn't feel good internally to you, just walking around in your day.
Yeah.
So that would be my other answer is like, if you've lost multiple times on a trade with one asset and it just doesn't feel good, it's okay to just be like, this isn't rational, but I'm just not going to trade on this asset anymore or for a while.
Yeah.
Well, what's wrong with that? There's so many things to choose from. So,
yeah. And what about if we flip that to the positive side? Because I've also seen people who get into an asset and hold it for 2 or 3 years and it performs really well, and they become emotionally attached to it in a positive sense.
Yes.
And assume that it'll never go down again. And then they just keep holding and holding it for too long. Is there anything you would say to help combat that?
I love this, because this is where recognizing we have relationships with assets. And the more we become conscious of that, the more we can become aware of how that might be coloring our decision making. This is really important. So if you feel awful about MicroStrategy because you bought at the end of 2024 and it lost 5x the value or whatever, that's going to color how you feel about it. Are you going to buy more or not, right? And similarly, I think that once somebody has developed, particularly when there's kind of a charismatic CEO, there's a bit of a cult of personality, let's be honest, that develops around people like Michael Saylor or Elon or whatever. Now, these are both assets I've owned or have owned in the past. And so I'm not putting them down, but I think that that's very dangerous, because then you have like fanboys on X that are they just they're permables no matter what happens, no matter what the TA looks like or whatever. That really clouds one's judgment.
Yeah.
So the more that we see, oh, this is a relationship I have with this person, I have a history with this person or this asset, history of feelings, a history of different trades and tracking the charts, and this is all an experience that comes into this relationship. And that can really mess up our judgment about something.
Yeah.
So positively or negatively. So
yeah, it's such a fine line, because there's an old saying, like, the only way to make an impact in life is a long time in one direction. Just the idea of focusing and having conviction and, just repeated practice. And I think there is value to that. And in trading and investing, some of the best traders have just allowed an asset to compound over, years and decades. And that leads to very positive results. And so I guess with these higher beta assets, and also the time we're in, in the world where technology is accelerating and narratives are shifting so quickly, this is more of a question than an answer, but where do you draw the line? I've been trying to ask myself this, between high conviction and holding on to something, and just being ready to move and be more nimble, and not be as attached to any one narrative.
Right, exactly. And I think that is where the art craft skill of this all comes in, is like, how do you personally balance the fundamental analysis, the technical analysis, and the inner analysis? How do all these things come together? Let's just jump into a few of the Patreon questions that I had bookmarked here. It's all related to what we're talking about. So Chewy said something about selling something, buying back lower. It gets so stressful, worrying when the price ends up shooting back up. It's not worth it for me most of the time. Better to stick to long-term investing for me. And I love that comment, because that kind of is a much more abridged version of what I was trying to say earlier. This is a person that's learning, what kind of person am I? What kind of investor or trader am I? The analogy that I think of is that as humans, we go through so many developmental trajectories. And the way that we discover ourselves and our identities is that we run experiments and we try things on. This is really obvious in adolescents that change their entire identities every like 6 months. I'll speak from my own historical time. I'm alternative, and now I'm, goth or a prep or whatever. But through that kind of ridiculous experimentation, you find out, well, I don't really like listening to metal music that's like super depressing all the time. So maybe I'm not goth after all, or whatever. So I think that this is what Chewy is speaking to, is like, I tried a more active trading strategy. It felt like crap for me. It didn't work. I'm a long-term investor. Yeah. And so I think that's a good microcosm of like, we have to try these things on. Like, I tried perp trading for a little while. I hated it. I'm not going to be a perp trader. Like, it just made me miserable and I lost money. I'm not interested in doing that again. Yeah. But I had to have that experience, and I was smart with my allocations, and didn't lose that much ultimately. So I think that what I want to encourage people to do is really try on these different kind of avatars and see which one actually fits. But then knowing yourself, like for me, I'm much more of an investor than a trader. I might move stuff around, rotate a little bit here and there, but I mostly buy and hold, because I'd rather put my passion into what I'm passionate about, which is working with people. And I'd rather make money that way than snipe on a perp in the middle of the day or something, Sure. So I'm much more interested in investment psychology than day trading, so that's where I put my energy.
That makes sense. Yeah. I think the adolescent analogy is perfect, because the most successful traders, they are focused. They find their style and they stick to that, and they know their rules. But you have to explore these different avenues to get a feel for what's out there and for what works for you. Yes. And again, I would say what Chewy is leaning into, you see the biggest returns by those long-term, high conviction trades. Yes. The only thing I would encourage you or Chewy to look out for, just in our current, state of the world and macro environment, is keep your head out the window, as James says, for a bigger correction or something akin to the GFC. Because you also don't want to get caught up in, a multi-year period of tumultuous markets that is very emotionally challenging and then distracts you from your other commitments in life. You have your practice. Yes. Chewy works in the medical field, without saying too much, but he's very busy and has things that deserve his time and attention and emotional energy outside of trading.
Yes. Yeah. And so then that is another thing around conviction, is where does conviction come from? And I mean, it seems to me that like just the more information, the better in terms of what's going on in the world and whatever. But I wonder what you would think about this. Like, I'll use another analogy. If you're a musician, when you first start playing music, you are not the most original musician ever, right? You learn the songs of people that you like and you replicate them. And so I think
Wonderwall.
Great. Yeah. So I think that's a good thing to do as a trader or an investor. You follow somebody on X, you follow their Patreon, you try on their style, you see how it feels to you, and over time you refine. So here's another one. The summary is loss of faith in the crypto markets after a theft that occurred was the summary. And I think I actually kind of answered this previously. There's nothing wrong with not staying in a relationship that was abusive in the past, if that makes sense. So maybe your partner has changed. Maybe they've reformed. Maybe they've gone to their court mandated therapy and they're going to treat you better. But if it doesn't feel good, it doesn't feel good, would be my stance, to prioritize the emotional thing. The other thing that you could do is maybe, let's keep running with the relational analogy. I believe she was on a crypto exchange that was maybe not as good of a crypto exchange, let's say. So another way to restore trust might be to have a more reliable partner that you're dating, so to speak, in the analogy. I don't know, Coinbase or something that's more, I mean, their fees suck, but something that's more regulated and something that maybe you have more trust in, right?
Yeah,
so,
totally.
So like really honoring that the feeling of trust actually matters with respect to an asset, that it's not just something to ignore. I think it's important.
Yeah, I think you're hitting on something good there. Each asset class is a different personality type, and there are different personalities that you might jive with better than others. And some are more stable, some are more volatile, and figuring out what works for you. And it's unfortunate. I actually would love to hear from you, because I haven't been in that situation in a business sense or a relational sense where someone has really broken my trust, in that fashion. And I can absolutely imagine that it would be hard to get back in to that asset after that. So I mean, how do you normally help people work through that break in trust?
It's very specific to the details of the situation. Would be my immediate answer. But the main thing is, don't force yourself to trust something that you don't actually trust in your heart. I would say that relationally and with investing, to not override that sense. And maybe there's a way to restore that trust too. I think it always depends. That's the clearest answer I can give for that, I think.
Okay.
But
and there's so many other things you can trade in markets, and there's always another opportunity out there.
Exactly.
This is a little bit related, but I found that a lot of people get blinders on. They trade one asset for so long that they don't really look to the left and right and see what other opportunities are out there.
Yes.
Do you think that would relate at all in this instance I mean, we've touched on it a little bit to say, well, you don't have to trade this particular asset. Look what else is around.
Yeah. And I think that speaks to kind of the relational investigation and what's your personality type and all of that. Like for me, I used to just be in index funds for a long time, like a lot of people. And then I realized that I don't like losing money over time, and decided that I wanted to do something different, So, so I think it's like, allowing yourself to shift and change over time as your needs and perspectives change too, I think is really important. Another woman in your community, she is worried about coming up short in retirement age.
Mm.
for her goals. And embarrassed about this happening and finding herself in this position, and life happened and whatever. I think this is maybe the best example of some of what I'm talking about with the emotional life. She said something, need to take on a lot of risk with limited funds in order to get out of her situation.
Mm-hmm.
And what I hear there is potentially an emotionally reactive trading strategy. Would you agree?
Mm-hmm. Yeah, I would say so. I mean, there's the practical considerations of life and those stressors of age, getting, I don't know if she's retired from her career already or doesn't have,
Mm-hmm.
any passive income coming in.
Mm-hmm.
But yeah, they're the practical considerations that then connect to the emotional side.
Mm-hmm.
And to me, it's a challenging place to be in because you do have some very real obligations that you need to keep up with, but
Mm-hmm.
you also need to temper your emotions to not make a unwise decision that potentially risks your capital and puts you in a worse place than you already are.
Yes. Yes. Good. Yeah, I was thinking along the same lines. And to add to that, from a psychological perspective, if we are not processing some emotions, then we are likely to try to fix the situation. And the
Mm-hmm.
more that we are able to come into acceptance of what is, the more we will be able to make a grounded decision. So I think with this woman, for example, like I felt sad reading her thing. Like that's a really hard place to be. And my sense is like, make room for the grief, make room for the anger. This isn't what I wanted. I hoped it would be different than this. I'm not where I want to be. I'm going to have to let go of some dreams that maybe I've had my whole life, and it's just not going to work out.
Mm-hmm.
That to really make a relationship with those feelings, then there won't be this kind of desperate trying to fix the feelings that turns into a trading strategy that might not be so wise.
Mm-hmm.
So,
Yeah.
and I think there's a lot of that. So this expands to something much broader, which is, you and I had talked about this before, and I think this is so important because when we have a goal, and particularly when that goal is infused with a lot of energy, then that's likely to cloud our decisions about how we trade. Like I remember I was struck because you said, I don't have trading goals. I just do what I think is a good idea in the moment.
Mm-hmm.
And I think if we have a lot of fantasies in our minds, I want to retire by 40. I want to have so much money that I can pay for like top tier care for my elderly parents or whatever it might be, that then we might start to make riskier decisions or decisions that maybe we wouldn't otherwise make. When something like that is operating, if we make more of a relationship with those emotions, we're less likely to just react or enact something through our trading decisions. Does that make sense?
Mm-hmm.
And feel free to ask me questions to clarify because I'm trying to bring a bunch of big ideas together.
That makes sense. I found the one thing that helps me is to really map out a plan and tell my money what to do. Because sometimes you can get so caught up in the big picture. I still have more time in my investing than the person who submitted this question. It's not at all the same scenario, but for instance, I rely on my trading returns to cover living expenses and, just the day-to-day costs of life. And my wife, the last year or so, has had a really hard time with her business. Her clientele is very tariff dependent, and she's seen a meaningful downturn and still has, a commitment for all these expenses. So we've had to figure out a way to cover that. And again, it's not the same thing as retirement, but just to kind of sharpen up how I thought about that. At first, it stressed me out because I thought, okay, that's going to take about 20% of my trading capital to cover that, which then impacts my ability to invest and meet monthly obligations and this, that, and the other. So I won't get too into the specifics of my plan, but for the person who submitted the question, I'm wondering if they can, instead of looking at just the stress, maybe map things out a little bit of what do I have currently in my investing bag? What do I have coming in monthly? How can I orchestrate my life? And what's a reasonable amount I need over the years? And then start mapping out some assets. Like James has great projections for Tesla out into the future. And maybe if you can give yourself a little bit of a roadmap saying, okay, this should get to X level by 2032. And if I make wise decisions or stay out of the market maybe right now while things are volatile and wait for those bottom moments, and, you know, what are the ways I can be strategic to do everything in my power to catch up, I guess, and
Right.
allocate
And
appropriately.
yeah, I love that. And it sounds like for this person, there's going to be some disappointing remainder that's almost certainly going to end up. So there's that emotional gap that's still going to have to be dealt with between expectation and reality.
Yeah. What was the
Right.
dream for retirement versus what the reality is now? Yeah.
Exactly. Exactly. So there's that risk of like hurting yourself even more if you are in a desperate, anxious position where you feel like you have to be somewhere else in order to be okay. I think that's when poor decision making really starts to kick in. That's when you bet it all on whatever at Vegas.
And just in a practical sense, I would encourage anyone in that situation to, at a time like this, don't focus too much on the assets that are down 80 or 90% from October. It's easy to look at those and say, oh my gosh, they were at $240 and now they're at 60. This is going to have great upside. Normally the truth is in the charts in terms of momentum, and those kinds of assets, maybe they'll have a pop a couple of years down the line, but they're usually going to grind around and languish for a lot longer. So don't let greed cloud your judgment in that sense. And especially if you're desperate, I would say it's a little counterintuitive, but going with stable, high quality assets, even though it might not get you there as quickly, and you might be looking and seeing some of these high momentum things go, it's probably the wiser decision. Or maybe you just allocate, 5 or 10% of your portfolio for those momentum plays to try to spice up the returns a little bit. But yeah.
All right. So here's another question that I had highlighted: how to manage the dopamine addiction when you almost become addicted to looking at your phone or your portfolio every minute. And when things are bleeding so badly, it's hard to just not make a move and sell at the bottom. Coping strategies and best practices. So this is a very complicated question, but I think I think it really highlights what I'm saying here, which is like, the more we know our inner lives, the more we will be able to map what's happening internally. So, for example, if we know the kind of feelings that are in our bodies that are likely to lead to revenge trading, that's really good information. And to learn to identify that and to learn to say, this is what I feel when I'm really pissed off that I lost 3 trades in a row. And I'm not going to make a stupid choice right now just because I'm angry. I'm going to sit with my anger instead of try to get rid of it by trying to win the next trade. Yeah. So, and another thing, so this notion of being addicted, I think is really important. There's a kind of like frenzy that can develop. And so my first suggestion to this person to try would be to step away completely for a week or two. Just stop. Just abstinence, if it's possible, to see what happens when you calm down, because the nervous system can get in a state of overdrive. And then it's all fear, and I'm not okay. And okay, so I've got to fix this, and I've got to fix this, and I'm afraid of this, and I messed up again. And it just really snowballs on itself. So there's something about like knowing, what does my body feel like when I'm emotionally regulated? What does my body feel like when I'm dysregulated? What does a revenge trade feel like? What does FOMO feel like? What does chasing euphoria feel like? If you start to map those emotional states in your body, then you can start to know. I had a moment looking at silver where I was like, should I buy at 60? Maybe I should buy at 80. But I'm like, that's the FOMO kicking in, right?
Yeah.
I'm not going to buy when the chart's already like this. Knowing those feelings in my body prevents me from chasing.
Yeah. Recognizing, is a very important part.
Yeah. So that's what I would say to her. And then in terms of best practices, I could even say do some embodiment guided practices on YouTube, yoga nidra practices, something where you're breathing into your body and getting out of your head. And anything, get some exercise, go to the gym, go for a hike, anything to reset that like mental, obsessive rumination, fear-based mindset, I think is really, really, really important. Recognize you're in it, do something to reset it.
The stepping away is great advice. W.D. Gann, who I reference a lot just from a TA perspective, but in his writings, he always took a break in the market. And we can't do this now because of modern tax law, but over the summer, he would sell out of everything for 4 to 6 weeks and completely disconnect from markets to come back with fresh perspective. And he would take that time to spend with family, just, I guess, come back with a more balanced view of the world to his trading. But as it relates to, those emotions of always checking the portfolio, I think for me, it took a couple of times of seeing assets go up and then come crashing down to recognize that those emotions are happening within me. And this might be a little overly simplistic, but if I feel like I'm checking my phone too much because I'm excited about how high the number is on the portfolio, I should probably be selling. And if I don't want to open the app because the market is so bad and I don't want to see how much I've lost today, I should probably be very active and see what's going on and be positioning strategically. And trying to do the opposite of those two emotions is usually the right call.
Yes.
And it goes back to, I suppose, going against the herd or the crowded trade in markets. If we can map sentiment, and it's not, a sentiment isn't a precise indicator, but in 2021, when every Uber driver was talking about the crypto that they had, that was probably a sentiment indicator that we should have paid attention to. Everybody out there is euphoric, so time to take some profits.
Definitely. Yeah, and that actually reminds me, there was a bookmark I had in my mind, which is, I guess we could call it mental hygiene. And there's really something around what information are you exposing your mind and therefore your emotional body to. So for me, I have an X feed that is highly curated, and I ruthlessly unfollow people if I feel like they're just trying to drum up my emotions or make me think they're gods or whatever, which is most of the finance world, to be honest, is this kind of emotional playing sort of stuff. So I think that's really important because, like, I'm thinking of the April 2025 drawdown. It's like, how do you orient during those times? Where do you anchor yourself? And for me, I feel like I follow people that are high honesty individuals in terms of how they're thinking of the market, because I don't have 20 years in markets to have the kind of conviction that I would want on my own. So I follow people that I think have a really good history of being honest and lay out their arguments. And if I think it's a good argument, then I accept it. And so I think that's important too, is like what's your information landscape that you're exposing yourself to? Because obviously if you just are reading like mainstream media fear hit pieces, you're going to be an emotional wreck.
Yeah.
You know? So that's been a big piece for me, is learning like, where do I get my information from? And particularly people that present information just in a very objective way too, I think is also very important. It's not like super intense emotional. It's just like, here's the chart. I think that, Bitcoin might have bottomed or whatever, just really like cut and dry stuff, I think is also, at least for me, better emotionally. So.
Yeah, absolutely. Yeah. Guard your inputs in a way.
Yes.
This isn't related to trading, but when I got up this morning, I was just sitting in bed and I opened up X and, I was just looking for a couple market updates from the accounts I follow, but there was a news video on what was going on in Mexico. with the state of Jalisco and I'm probably pronouncing it wrong, and the cartel violence that's going on there. And then you scroll and it, all the videos were related in terms of terrible things happening out there, fights, violence.
Mm-hmm.
And I was off for the first couple hours of this morning because I don't normally have cable TV or, there's not much outside stuff coming in. But yeah, that absolutely relates to trading as well. And I try to follow those kinds of folks too. No relation, but Dan from the Chart Guys, who's more of a day trader. But the thing I appreciate about him on all his streams is he always talks about get comfortable with the idea of being wrong. You're going to be wrong on a lot of trades. And he openly talks about every trade he messed up in a week and what he saw, what went wrong, what he could do better. Whereas the people who are just posting all the wins and you never see any losses from them, probably not the best follow.
Yes, exactly.
Yeah,
exactly. So let's just go back to the addiction thing. So this is interesting because, I mean, we could actually potentially do an entire conversation just on trading addiction. There's a lot to say there, but I can say about how I work with addiction in clients in general is usually if there's an addiction, taking it away will reveal something so uncomfortable and they don't want to face it. And that's why the addiction is there. So when somebody says, I have an addiction, I say, what would be there if you didn't have the addiction anymore? What would be left? Grief, loneliness, rage, abandonment, feelings of worthlessness. I didn't achieve my hopes and dreams in my life. Like there could be a lot of big stuff going on behind an addiction.
Stuff,
So, and money in particular is one thing that people, I think, easily go to kind of fill a hole in life, right?
Attribute success to it or failure. Yeah,
exactly. It's like an outer thing, like, well, maybe things aren't going so well, but if I get rich, then things will be better, right? And so I think that there's something there about like, what is the addiction helping somebody to avoid? And I wouldn't be surprised if a lot of people come to trading for some deeper, unconscious, emotional reasons. I think that this is applicable even to somebody that doesn't think they have an addiction per se. What are you trying to get away from? What do you think would be better about your life if you got to the place you think you should be or whatever? Often it's just a lot of like painful feelings that are driving that kind of behavior. So
I have some things I want to say on that, but I just wanted to go back to the beginning too, because when you were first talking about that, I was thinking the one thing I don't like about trading apps now, Coinbase, Robinhood, all of them, is that they are now gambling adjacent in terms of bringing in all these prediction markets. And there's the legitimate side of finance and investing, and the lines are getting blurred. And they're making a lot of revenue off of the gambling side of things. I saw a video today on there's now a prediction market for traffic cams, where if you guess the right number of people that will make it through the light before it turns red, you can bet on that. It's just gone to a degenerate state. So that, I guess for people with a proclivity already to that kind of addiction, it becomes a very dangerous environment. And maybe a practical solution is that you want to go with one of the old school brokerages like a Schwab or a TD Ameritrade where none of that is accessible.
Yes. And I love that because this goes back to this kind of core framework that I'm bringing in, which is really kind of know thyself. You are your own alpha. If you're an addictive person, you want to probably be mitigating against things that are going like, don't hang out at the donut shop if you have a hard time overeating or something, So I think that's important because if you know you're an addictive person, then maybe your better bet is to have a really boring app and do long-term investing or whatever. So, I mean, I can't give any particular person advice in the abstract, but just like playing with ideas.
Yeah.
So,
Totally.
So
I have another thought that's it's not totally related, but maybe there's value in it. What you were talking about earlier with fear and greed and checking the phone, and also just my own, I guess, personality or style of not having a goal of how much I need to make in a year and just focusing on the trades. That didn't come out of nowhere. That came from a place of understanding myself and what brought me joy, what I want in life. And, that took a while, because when I was younger, my identity was very much tied to my career. And I think if I would have started investing in my 20s, it would have been very much about the returns being a marker of success or failure and finding my identity in that. And
Yes.
now I've curated a very simple life. I am in the mountains. I can go out the door to go for a walk with my dogs or go for a trail run or a ski. And I've done that intentionally because it's like, I don't need much external stimulation. If I have my home life, if we have food on our plate, and if I can be outside and in nature and get some exercise, I'm fulfilled. So
Yes.
the external needs are pretty low, and I'm not having to strive after, I guess, a certain return to keep up with X amount of bills per month or a certain lifestyle.
Yes.
And I found the times where I did want more, like the fancier lifestyle or the vacations, or not saying vacations are bad. I still like traveling, right? But it's very easy for the monthly obligations to stack up, and then you become a slave to that, and then that impacts your decision making. And just like James says, everything is a pair in terms of trading. Well, you can also trade your time and your energy and your life just to keep up with X amount of bills per month that you set up in this lifestyle.
Yes, exactly. And so that's perfect, because another way of saying know yourself or know your identity is also know your values. And that's another thing that people can be wrestling with, because I think the finance bros are going to show a very opulent lifestyle. And, maybe that's not what we want.
Yeah.
I'm totally fine without the Ferrari or whatever. I don't really care.
Yeah.
It's not interesting to me. So I think that's really important, because I think people can get caught up in other people's dreams.
Yeah.
And
as a marker
as a marker of success, they can get caught up in other people's trading styles, other people's goals, other people's successes or whatever. So there's so much inner work around, is this mine? Is this my trading style? Is this my personality? Are these my goals for my life? What do I really want? What actually makes me happy? And this is where, for me, embodiment is so important, because when we're really feeling our experience, we'll have the information to know, does this feel good or not? Is this what I want or not? And often we'll find out that the ideas we had in our heads about what makes us happy is not actually what makes us happy. So you get to the goal, but you feel the same. Maybe the goal wasn't going to fix your problems after all, right? So, so there's so many nuances to this. So for me, I think that knowing yourself is as much of a lifelong practice as spending 30 years learning to get better at TA or something. That is just always this ongoing learning process. So, yeah. Oh, okay. One other thing was somebody talked about, quote, decision paralysis. That might be a state of overwhelm. Like we freeze when we're feeling too much, when we're afraid, when we don't know what to do. What to do about that, I guess, is a whole other question. But I think just where I would start is just naming, well, what is the nature of the paralysis? Am I frozen in fear right now? What is that fear telling me? Maybe I'm putting too much on the line, for example, or like, who knows? So,
and I think that goes back to the personality a little bit. And there's so much happening in the world, and I've noticed it too since running the Patreon. I'm trying to keep up more with the news and world events, and it's a lot to keep up with all that. And for me, it works because I like being informed and looking to the macro, and then the indices, and then the sectors, and kind of trying to piece together this tapestry. But I have a friend who's a trader who I'm on a text thread with, and he has completely cut out the news. He never listens to an FOMC press conference. He's found for his personality, sticking just to the charts, just to what the money is doing in terms of flowing in and out of assets works best for him. It's none of the external distractions. It's just, what's this doing and how can I trade this asset going up or down?
Yeah. Well, that's points to a whole other, I think, psychological development journey, which is, what is your theory of a market? What is your philosophy of markets? I follow a couple people that are just like, I would say, TA fundamentalists, we could call them.
Okay.
Everything's always in the charts. Narrative follows price or something. What's the phrase that they use? So
yeah, exactly.
So that's a whole other journey.
The chicken or the egg? Yeah.
Yeah. But it's interesting because how you orient to that will definitely change your behavior and your choices. So this could be a whole other conversation too, but from a depth psychology perspective, the market occupies the role of God or mother or father. Like in our minds symbolically, I believe that unconsciously that's what the market is. Is mother or father loving or punishing, withholding, transparent or confusing? How do I feel when mom is chaotic and all over the place and unpredictable, right? So the feelings that we have from our childhoods, the core relational frameworks that we had when we were kids, will impact how we relate to the market in general. So this is a whole other layer. I just wanted to name it as a whole kind of inquiry. That I think is very fascinating. So
that's a very interesting way, to frame up relating to the markets. As you were saying that, a different picture of the markets came to my mind, which I hadn't really thought about before, which I'll mention in 1 second. But the one thing I wanted to say, just going back to those traders who are saying, it's all in the charts. That's true a lot of the time, because going into, say, an asset has some big press release that makes it pop, and then you look back at the chart and, well, it was drifting upwards for 2 weeks going into that press release. That's because insiders knew and some people were front running it and there was more buy side pressure, or the same can be said before a drop. But there are always those random instances. I don't know, an oil field blows up or something because of a mechanical issue, and then there's less supply and all of a sudden the price spikes. So it's like, yes, most of the time you can make sense out of the charts, but the world is random and there are things that come out of left field that will also impact price. But the mother-father thing was interesting. Sorry, did you want to say something to that?
Oh, I just want to say that ultimately, and this is kind of related to the mother, father, God sort of thing as well, actually, is at some point, it really comes down to, what is our core relationship to unpredictability, uncertainty, chaos, our lack of control in life? Like, the market causes us to confront all of those things, and how we manage those experiences internally will really affect the quality of our decision making. So as you were talking about mother and father, I was asking myself, how do I view the market? And the first thing that popped in my head was, the market's kind of like the universe. And there are a couple theories on the universe of it being this cold, indiscriminate, uncaring thing, which is one way you could view it. Or you could view the universe as divinely beautiful in some way. That even though there's a lot of chaos out there, there's also a lot of order in terms of our distance from the sun and, just all the fine tuning aspects that allow for life and these different things to flourish within the universe. And sorry, we're getting off on a little bit of an abstract tangent, but as it relates to the market, there's also that chaos and beauty that are in tension in a way, where you have all these millions of random inputs. You have computers trading, you have institutions, you have individuals like you and me, you have insiders, and somehow some semblance of order comes out of that. And in the universe, everything is comprised of energy and impacts one another in some way to bring about some order or homeostasis. And I think it's the same in markets. We're just a very small component, and we could view it as not caring about us and us being irrelevant. Or we could choose to view it as like, we're playing a part in this, and we're seeing order and fear and greed and human emotions play out on this grand scale. And I think there's a way to find
some beauty in that. And even though you can't control it, you can kind of flow and move with it in some way if you get to a good place in your trading and emotional life.
Yeah, exactly. Yeah. And so maybe to wrap up that idea is that I see the personal growth trajectory of a trader or investor as working on some of the core problems of life itself through all of these dynamics that you're talking about. How do I learn to relate to this? Like, it's beautiful and chaotic. I think that there's so much potential in one's own development, just wrestling with all this stuff. So yeah. So then my last thing that I would say, to not hesitate to invest in your inner life. That's an important part of this. Hire a therapist, hire a coach, like somebody to help you with this, because we do not have the capacity to become fully aware of everything happening in us all by ourselves. We're relational beings. So I think that is important, to at least be doing some inner work and getting some help from time to time, especially if you're having a meltdown and making a lot of bad trades or something. It might be a lot cheaper to get some sessions with somebody than to blow a bunch of money with more bad trades. Think of it as part of the investment strategy, would be my thought there.
Cool. Well, thank you for sharing all those insights.
Sure. Yeah. So let's sign off, and then we can chat for a moment if you want. So, okay.
Sounds good. Thanks, Richard.
And I would say that because I think you'll post this on your Patreon. If anybody has any other questions, just send them out, and let's just see where this goes. So,
okay. Sounds great. Thanks for making the time to do this.
Sure. Thanks. Okay.
All right.